The business is in a strong place and already has a strong balance sheet, but this gives us the capacity to increase our investment in land so that as we come out of this crisis, and these sort of sites will, sort of be open and available for completions in 2022, 2023. So it's not about the short term, it's about planning for the medium and long term. And we're very positive about the medium term in the UK housing market.
How open is the system or the housing market at this point? I just happened to be looking at the planning portal for my local council yesterday, and it was just slapped with COVID-19 notices, effectively saying things may take some time because people are off sick. We're not working at the speed we were previously. Are you noticing that there is a grinding to a halt of the housing market at the moment and the process of getting new homes built?
No, I think that's too harsh a description. During the sort of main stage of the lockdown, clearly some local authorities were effectively sort of suspended for business, but quite a lot, even through that process, have kept the planning process going, have kept, sort of the approvals process going. So it absolutely hasn't ground to a halt. And I think, whilst it's not yet normal, we do expect over the next couple of months to see, some sort of normality return. And as for the housing market itself, we've been open for sale now, appointment only, to make sure that it's safe for about 3 weeks. And we've seen good response from customers. The business has a very strong order book. So again, this isn't about the short term. This is about investing in the long term. But actually, the short term signs are quite positive.
Pete, first of all, congratulations on returning the furlough money, because things are better than you thought as well. Can I ask you a question in the round about this rather than just about the housing market? Do you think too many companies have taken the money from the government when they didn't actually need it, have taken money which actually they're going to use on things that are unnecessary and actually should return that money?
I think it's very difficult to judge, isn't it? I mean, we sort of did put people on furlough and did sort of apply for the grants in the early stages of this, and I think that was the right decision at that point in time. You didn't know what the impact was going to be on your particular business, your particular industry. I think now it's the time for companies to look at it. Some are still obviously in a tough place and, do need to retain that money to stay in business, to keep their people in jobs. It's bought time. I think that's the key thing. Bought time for companies, and that means it's bought time for jobs. But I think it is the responsible thing, if you come through it in a strong place, to aim to return that money. And in some instances, that may be some, not all. For us, it feels appropriate to return all of that money.
My second question is about the furlough, again, if I may. I'm seriously concerned that the majority of these 9 million people, hopefully they will get back to work, but a large number of people are just going to find themselves perhaps on the claimant count after the furlough ends as well. Is that going to dent the medium-term outlook for the housing market, or am I completely wrong, which I hope I am, by the way?
Yeah, I mean, I hope you are, but I don't think any of us could confidently argue there won't be an increase in unemployment. I think it's really hard to work out, sort of how large that's going to be. And most importantly of all, both for the individual people and, sort of for business and the economy, the question is how long and how deep. Sort of it's pretty clear there will be a peak during this year. It's how long that lasts. I think we are broadly optimistic about the economy, but that is one of the areas that we will continue to watch. It's definitely a risk.
Pete, it's Karen jumping in. I want to ask you about the market conditions out there as you've embarked upon this capital raising. It's not the first time you've gone to the markets during a crisis. Back in 2008, you had a largely unsuccessful capital raising. What would you make of the difference this time round? Clearly, there's been a lot of central bank intervention and also fiscally from the government. Has it made a difference as you've gone back to the market?
I think it absolutely has made a difference. I think, sort of banks and, central banks and governments learned a lot through the financial crisis, and we're in a position to react far more positively, sort of in this crisis. It's obviously of a very different nature. I also think, however, our business is in a very different position as well. We've returned £2.3 billion to shareholders through dividends over the last few years. And our conversation with them through that time has always been, there's times in our industry when it's right for us to create cash and to return it, and there's times when it's right for us to invest. And I've been really pleased with the response from both our sort of existing shareholders and new investors to this capital raise, because they've absolutely backed that strategy. So yes, I think the economy is in a different place. The robustness and certainly liquidity is in a massively better place than it was in 2009. But also, as I say, the business is in a better place.
Peter, I want to talk about the behaviour patterns we're going to see out there in the housing market in coming years, because there's a feeling that COVID-19 has accelerated some trends around remote working. More workers want to work from home. You may see less concentration of workers in major cities. So you're having to plan for those potential changes that may or may not happen. What do you make of what you're now purchasing, the sort of land banks you're looking to add, some suggestions that you're trying to diversify away from very large land purchases to maybe some smaller ones? What are you anticipating now in coming years, and what will that mean for these purchase intentions?
So I think there are definitely some behaviours that have changed in the short term through the last 3 months, and some of those changed behaviours we do expect to continue. I think you mentioned the remote working, and I think both because for many individuals there's been positives to that. It's not entirely positive, so I think it's a balancing act, and also for many companies there has. So I think those sorts of behaviours I don't expect ever to go back to quite where they were. And from a housing market point of view, I do think some of the markets that tend to be good places for people to buy, where they can work in large urban centres, but on an occasional rather than a daily basis, actually will benefit from that. And we've seen that trend over the last few years with markets down into the southwest and into East Anglia strengthening, and I'd expect that trend to continue. I'm not so convinced, however, that all the behaviours become underlying habits. I think if this sense that people won't want to live in London, for instance, I don't think that's true. I think there are too many positive reasons to want to live in London, and it's a trade-off. I think lots of people take different decisions about exactly where they want to live at different stages in their life, in their family development, and what they need at the time. And I think it's one factor, but I'm not so convinced it's a compelling one.